Hi there. Hope you all are having a great day. This is David Chalker with the Remax Premier, the Chalker Home Team, and coming to you today with Rich Seri from Alliance Mortgage Group. Rich is going to talk to us a little bit today about mortgage rates. We're going to talk about the market. What do you need to know about applying for a mortgage loan, et cetera, et cetera. So hopefully we'll provide you with some valuable information today, not only about the current market, about anything you might need to know about home mortgages in the future. So Rich, welcome. Good to see you today.
Yes, sir.
All right. So well, the big question on everybody's mind and in the news is mortgage rates. So why don't you just tell us what you think's going on with mortgage rates right now?
Well, I mean, mortgage rates obviously are moving up and down every day based on yesterday's report on inflation. The market didn't like that, so there was a huge reaction to that. So interest rates have spiked as of yesterday. They've kind of settled today, but no real changes. So, moving forward, it's a day by day. To give you kind of an example, I quoted a rate for a gentleman, 2 days ago. He took his time to, I guess, digest that information, and he said, "Hey, let's go ahead and lock." And yesterday, the rate wasn't there. So, if you're looking to get into the market and you're looking for the best interest rate, what I recommend that you look at with your lender or whoever you're using is they have an extended lock and shop program, to where you can lock in a rate while you're looking for a home to hedge off any further rate increases. There is a float down option during that process once you get under contract if there is improvement in the rate market to look at that option. But if sitting on the sidelines hoping rates will retract a little bit, again, it's going to be a day by day for sure.
Yeah, and one of the things I've been telling people is, even though the market, rates appear to be going up, it's never too early to get ready to buy. I mean, if you're thinking about buying in the near future, it's really a good idea to go ahead and, talk to a mortgage lender, get things in place so that when you're ready to move, you can get on it and you're not, like the situation that you just said where he's taken a couple of days to think about it and now the rate that he wanted isn't there anymore. So being prepared,
Um,
if you know it's coming, it's a good idea to get prepared for these things.
and you want to be a little fluid with the process. So, another example is I've got a few customers that are in the middle of a new build and they're trying to time exactly when they should lock. But the problem with that is builders aren't giving them a confirmed close date. So you're finding yourself locking a loan for 60, 90 days, and then, you're still not at closing because the builder still has a few delays on the loan. So it's hard to time the market. I understand that, but if you can do an extended lock with your lender, there's going to be a cost to do that. You're still going to come out ahead if rates continue to increase. You're hedging that increase.
Yeah.
You can always refinance the home at a later time. So, I wouldn't be too hung up on rate all the time. Let's look at payment. We do have some rate strategies that we can talk about to help get that payment lower. One of which is a 2-1 temporary rate buy down program. Some lenders are offering it, not everyone's doing that. And the way that works is in the first 12 months, your rate's going to be 2% lower than your qualified note rate. The next 12 months, you're going to be 1% lower than your qualified note rate. And then year 3 moving on, you're back at your qualified note rate. So what that will do is it's going to save you money over the first 24 months. Now, the seller, though, has to contribute in closing concessions on that because all that has to be paid towards that buy down. The buyer can't do any of that cost at all. So in the negotiating part of the contract, that is something that we should offer or look into offering when you're negotiating the contract to help that buyer get a little bit of a lower payment and it still gets that house sold.
Those are all reasons why you need an excellent mortgage broker that you can work with and an experienced realtor that knows about these things and can help you negotiate those situations. Not something you can really do on your own, right?
No, you can get a lot of information online regarding rates, but you got to keep in mind what you see that's published is last week's rates not the current rate, because your mortgage coupons, they trade every day throughout the day. So we could have a rate improvement one day and a rate going down the other way. So what you're seeing is last week's information. You're a week behind.
Right.
So, when you're shopping a mortgage rate or a mortgage lender, I always suggest to my clients, if you're going to shop, which you should, do it on the same day, because you can't shop with one lender on Monday and then shop that same rate on Monday on Wednesday with someone else, because that you're not comparing apples to apples on the same day.
And I think people tend to get hyper focused on two things. One is interest rates, whatever they're hearing about in the news, and second is price, home prices. Are they going up? Are they going down? And like you said, there's always a lag in the market. Based on yesterday's rate that you saw published is not going to be today's rate necessarily. So same thing with
Right.
prices. It's
Yep.
awesome. So why don't you talk to us a little bit about what people need to do to get prepared to apply for a mortgage? Like before they even talk to you, what do they need to come to the table with? What kind of things are you going to be asking them? And how do you work with people?
Well, you have pretty much the same process, at least that I take with everyone. Being a first-time home buyer, someone's that bought 5, 6 properties during their lifetime, it's all the same process, right? So we're going to take an application with them, get all the information needed, because that loan application tells the complete story. So we're going to get that complete loan application. We can do that online. We can do it over the phone. In addition to that, we're going to look for and request the income documents, the assets, if they're self-employed, the tax returns, all properties that they own. We're going to do a complete, what I call like a mini underwrite, just on our desk. Now, if it's something that we need to maybe have an underwriter get involved with, or we need to do a manual underwrite, once we get all our information in front of us with credit being pulled, we can do it to be determined underwrite. We can send a package to the underwriters. They have a lot of time on their hands since things have slowed down a little bit. So we can do a pre-underwrite without a property. So get all the conditions that we need, get it approved at the terms that we have submitted, and then they can go shop till they drop. And once they get under contract, you're closing in 10, 12 days. So it does help speed that process up. If there's any concerns, we'll know right then and there with underwriting. But that process is the same from the lender standpoint as from application, getting the income docs required to review, and getting the automation done.
So as a realtor, we always recommend people get a pre-qualification letter from a lender. How long does it take them to get that through review once they've supplied all the documents that require? How long does it take?
We'll have that same day. That's a same day process.
Wow.
Now, if it's something that if we have some challenges we need to overcome, there's some income lagging, or if we need additional income, they make overtime or bonus income, we need a written verification of employment. That might take a little bit longer, but typically we're going to be able to get that done in 24 hours. Now, if we're talking about a to be determined underwrite, where we have to actually send something to underwriting in case we want to make sure all our due diligence is cleared, then that's going to be about 24 to 48 hours. But for the most part, it's going to be the same day.
So I get the impression from what you've said that really applying for a loan is a very individualized process, at least with you. So you take into consideration everybody's specific circumstances, and then I assume you offer or propose loan packages based on their personal information, right?
So there's a lot of programs out there that an individual may qualify for. You have your first-time homebuyer programs with Fannie and Freddie. You've got your traditional first-time homebuyer program with FHA. You've got your veterans for VA, and then you've got your USDA platform. You also have non-conforming, which is your bank statement program for self-employed customers. You have what's called the DSCR program for investors who want to buy investment properties. That's a very simple process. So we're going to, like I said earlier, the application tells the whole story, right? So we're going to process that application and then fit them into the best program payment wise. Because each program has different criteria, credit requirements to put them into that loan. So we always start conventional, then we go to FHA. If they qualify for both, we're going to tell them what the pros and cons are on each program. Each program has a different down payment requirement. And FHA does have a down payment assistance program within the lender that can help fund that down payment if they can't complete the full down payment on their own.
Awesome. And I know that you work with people individually and make it as smooth a process as possible. I know that my clients that have worked with you have been very thrilled and pleased and appreciative of all the help and support that you've given them, and timely communication, which is a big deal, especially in real estate. And things can happen fast, right? When you got putting offers on houses and things, sometimes you need a response really quickly. And Rich is really great at getting back to you. And so
one thing I want to add to that pre-qualification process that I've seen, some customers that have come to me after they've been pre-qualified, or what they think they've been pre-qualified, is, some lenders just pull credit and they qualify you off credit score. They don't do the full due diligence. Have they provided income documents, assets? Have they given the whole picture to the lender to do the full scope approval? Some will just pull your credit, say you're good, here's your down payment, you've told me you can do that, you're good. So, I go a little bit further because I'm big on making sure that if I'm telling someone they're qualified, they're qualified. If there's an issue, here's what the issue is going to be that underwriting may ask us for. So, I tell all my customers that we're going to sprint out of the gate and we're going to jog to the finish line and get everything up front. So there's, only a handful of conditions on the file when it comes out of underwriting.
Awesome. So I'm going to kind of throw a curveball at you here for a little bit. So we know there's a lot of like e-lenders out there, like Rocket Mortgage, and there's some others that I can't think of right now. Can you kind of tell us quickly why should somebody come to you as opposed to like going online and filling out that Rocket Mortgage application?
Well, Rocket Mortgage, great company, big company, very well branded, but the difference between a large mortgage company like that and a small independent broker like myself is we give options. We're not tied to one loan, one lender. Your retail lenders, they have their in-house underwriting, all that fun stuff, and they have their interest rates. But we have the platforms where we can go to a handful of different investors that may see something different on an underwrite versus one set of eyes with one lender. But being a small independent mortgage broker, it allows us to be a little bit more fluid with cost, rate, margins, all that stuff that most retail lenders, if you're out there with a Rocket Mortgage right now proposal, or they haven't given you a proposal, when you do get that, the one thing you want to start looking for is Section A of your loan estimate. And are they charging you a huge amount of discount points to get to a particular interest rate? That's not the norm out there. You can find other programs, other lenders that might be able to offer better terms on that rate with not a huge amount of cost up front. So that's what makes us different. We're smaller. We don't charge discount points unless there's an option there to do a discount rate buy down to better the terms. But the difference between us and the retail lender is that cost might be a little bit lower.
Awesome. Excellent information, Rich. Well, we can't talk about real estate without talking about the housing market at the moment. So did a little research this morning, and I'm going to talk a little bit about Collin County specifically, because that's where we are. We're in Collin County, Texas. And we kind of had the peak of the market, I think, happened in May. So in May, the median sales price in Collin County was $576,000. As of August, it's $525,000. So we've seen a pretty steep decline. We're still above where we started this year, but we've seen that drop. Now the drop is leveling off. I mean, we had a pretty steep drop in July, August, but we're seeing that trend start to level out. So I think we've seen the top of the market, at least for now. The question everybody's asking is, how low is it going to go? And the answer is nobody knows. I mean, we don't know. You don't know.
Right.
Nobody can tell the future. So that's just kind of a wait and see. But a little bit of context, I've been telling clients that right now is the best time in 2 years to buy a house. And I don't think that's an exaggeration for a couple of reasons. First of all, we've gone days on market, how long a house is on the market. We've gone from 5 days in May to 15 now. And we're seeing some houses that are, 30, 60 days on the market, which, a year ago, that was unheard of. And you're not having the competition that you used to have. So if you're a buyer in this market, you're not going up against 15, 20 other buyers. You may have a couple, or you may be the only buyer on that house if you get in there early enough, and depending on the location and everything. So your odds of getting that house are much higher than they were. And an important statistic is that percent of original price. So in May, people were paying about 107% on average, or median, sorry, the median sales price was 107% of the list. So 7% over. And you heard all the stories, 50K over, 100,000 over, depending on the price point. Well, now we're looking at 99.3. So the median sales price is 0.7% less than list. So yeah, you can actually get a house for list now, which is, it's been very unusual to have that happen.
Well, I think what's interesting with those figures too is how much the house prices in our area have increased, even with the debacle in 2007 to 2009, right? So your home is still going to be a great investment. Over time, it will appreciate. It may not appreciate in year one or year two like we saw a few years ago, but over time, it will appreciate. One thing I want to mention too, with the houses taking a little bit longer to sell, so to speak, that allows the buyer to be have a little bit more leverage on the offer. I've seen a few contracts come over this week where the seller is now paying for the owner's title policy. They're paying for the survey, a little bit of seller concession. The days I think of the buyer having to pay for everything in over list price, I think those days, like you said, are probably gone for a while. So there is opportunities there to still get a good deal on a home without waiting for continuous price drop. Because one thing you can do as a buyer, we talked about earlier, that 2-1 buy down, is negotiate that concession to help you offset your payment if you can get the seller to agree to do that.
Yeah, absolutely. So really, as in the realtor space, what we're calling it is a balanced market. It's really, we're kind of getting back to where we should be. And a balanced market is good for everybody. It's good for the buyer. It's good for
and I think there's always still going to be a little bit of inventory. I think there's still going to be a little bit of your inventory supply and demand out there, because you still have a lot of buyers out there.
Yeah.
And not a whole lot of inventory.
And one of the things that's going to keep, prices up in Collin County is the demand. I mean, we do have more supply in the market, but we've still got people moving here. I just attended the mayor speech, and he was saying that we have 1,000 new residents moving to Frisco every month. I mean, that's mind-blowing. It's almost hard to imagine that many people moving here, but it's true. That's what's going on. And so the demand here is going to continue. So I think if I was going to buy, I already live in Collin County in Frisco, but if I was going to buy a house today, I'd buy it in Collin County, because, this area is, I think, going to remain a strong market for real estate.
Yeah, I agree. I mean, we've been here, just our family here for 22 years, and we've seen it grow. So, it's been a blessing to find a home here in Frisco and raise our kids here. So
yeah, same here.
Wouldn't change it. Yep.
Well, Rich, thank you so much for your time today. How do people get a hold of you?
They can go to my cell phone, 972-948-7473. They can go to our website, www.alliancemtggroup.net, and look us up online. I mean, we're everywhere. So we're easy to find.
All right. Well, if you need a mortgage, Rich is your man. So give him a shout out, and let him help you get into that house of your dreams. Thanks, Rich, again for being here today, and we hope to talk to you again soon.
Absolutely. Thanks for the time.
You bet.